Welcome guys, it's your boy Anonymous and welcome back to the channel. In today's video, I'll be breaking down the CISD, which is known as the change instead of delivery, and how it literally changes the entire flow of a trade setup. You have seen it, but you are unable to identify it, or rather you do not know that it's a change instead of delivery. So if you're watching this video, stay tuned, watch to the end, because I'll be breaking it down to you all in detail. Alright guys, let's dive into a live example of what a change instead of delivery is all about. Right. A change instead of delivery simply, or the simplest way you can express it or explain it to anyone or to yourself, is simply where price changes from a downtrend movement to an uptrend movement. Yes, I know it sounds tricky, it sounds funny, it sounds somehow, right? But then that's what a change instead of delivery is all about. But then this is what you should know in order to get a change instead of delivery. As a trader, you need to always ask yourself, do I have a key level, right? Do I have a key level? Ask yourself that question if you have a key level. Because if you have a key level, then first of all, you are on the right track, right? And before asking yourself about the key level, look at the bias of the market. Is the market bullish or bearish? Bias of the market. Is it bullish or bearish? Bullish or bearish? Because once you know the direction of the market, then you have your key level. That is when you scale down to the lower time frame to look for your change instead of delivery. Because you should remember this, or you should have this in mind. Every time frame guys, will always give you what? That range. Or every time frame, if I should say it, is a range. So always take your time to ask yourself certain questions before you can start to look for trade opportunities, be it a buy or a sell. Ask yourself, do I have a key level? Like I said, do I have a key level? Because if you have a key level and you know the bias, then you are on the right track, right? You are on the right track first of all. But then let's dive into the simple way that you can actually try to look at the change instead of delivery. Now you are in a downtrend, then suddenly you see price retracing back to the upside. Most of the times, buyers will always get induced to buy, and what will happen? Market will sell, taking them out. Why? The market already knows that there are stop losses resting below this level. Obviously, what was happening here was clearly an inducement to induce buyers, early buyers, to enter, and price will take them out. And after price takes them out, what happens next? You see price doing what? Spiking to the upside. And once price spikes to the upside, what do you notice? A key level will be left behind, right? A key level will be left behind. What can be that key level? The key level can be a fair value gap, it can be an order block, but a strong key level, like I always tell my people, a strong key level is that which has an order block and a fair value gap above it, right? If you have to take into consideration a key level, you should have an order block and a fair value gap above it. And what causes the fair value gap? What causes the fair value gap is the impulse push to the upside after price takes out these early buyers. And when price takes out the early buyers and now you see that impulsive move, what do you see next? The next thing you have to wait to see is a shift in market structure, or what is known as a fair value gap, right? You wait for a market structure shift or a change of character, as a normal trader should do. Because I know a lot of people, once they see price push to the upside, they start clicking buy, or sell, but without seeing this clear change of character or market structure shift. And when you have this change of character now, what do you expect? You have your key level resting at this level. Most at times, this is what price will do. Price will push to the downside, and what will you notice? It has not gotten to your key level. Most at the time, price will push to the downside and end a little bit halfway, then give you that push to the upside. Then there comes the change instead of delivery, and then the spike to the upside. And where is price going to? Price is targeting the opposed liquidity, which is what? The previous range high, previous daily high, previous hour high. It depends on what time frame you are trading on, right? A lot of people ask, what is this? This is simply an inducement, right? Or liquidity. Price will collect this liquidity, give you that clear change instead of delivery, then spike to the upside. And now there's another problem here. A lot of traders always mistake a change instead of delivery with a market structure shift or a change of character, right? In my terms, I would say that a change instead of delivery is when you have the market structure shift, like I was saying, right? Then you see price pushing to the upside. Most attempts, change instead of deliveries occur on higher time frames, and on higher time frames, you get to see them clearly. On the lower time frame now, you need to train your eyes enough to see the change instead of delivery. And when I talk about the lower time frame, I mean the 15 minutes, the 5 minutes, right? Because you see this on every time frame, but you need to train your eyes to be able to see it. I consider a change instead of delivery when price has bought or sold to a certain level, then spikes to the downside before shooting to the upside. And it doesn't happen randomly, right? There must always be a key level to which this price will come and react at before pushing back to the upside. But then a lot of people will never see this because they'll notice that price has already gone, so there's no way for price to come back to this level. And that's why I say you mostly see the change instead of delivery on higher time frames, right? It's always clear there. Maybe the 4 hours, you can clearly see a change instead of delivery on the 4 hours because price will always come back and retest that key level. And that is when the real move of price will start from, or that is where the real move will come from. This was just the liquidity that was being created, right? So, like I said, on the higher time frame, you always see that clear change instead of delivery, right? I mostly trade GU, so it's very easy for me to see it. And on every pair, and on the pairs you trade, you always see the change instead of delivery there. But you need to train your eyes and you need patience to see this happening, right? And now, we know what is not as a turtle soup. Or if you do not know, today you should know about it. Learn, listen carefully. Now, a turtle soup occurs when price sweeps or collects liquidity which was resting on the previous side of the market. Like I earlier explained here, where price comes and induces early buyers, then takes them out. What the price do there? It collected liquidity. It collected enough fuel for it to be able to do what? Push to the upside. And that is where that impulsive push comes from, which gives you what? That fair value gap. To get the change instead of delivery, the change instead of delivery comes from the last candle, guys. The last candle, which collected liquidity from the downside or from the upside. And we are in a bullish scenario, right? Which will be your key level here. Your key level will be the last candle, the last bearish candle, which collected liquidity from the downside. Give you now what? That turtle soup. But a lot of people always come and ask, must the other block be the black candle, or should I say the red candle which collected liquidity from the downside? No, no. Other blocks, we can say that yes, it will consist of the red candle, but then there is more to that. We have what we call time and price, right? But we'll talk about that in our next video. But you should know that the other block is the last candle which took the soup, which collected liquidity from the previous day or the previous hour or the previous week. You mark out that key level and you wait for price to come back into the key level, then you buy. Coming back here, you see that price did what? Engineered liquidity here, push to the upside. And now what did it do? It gave you a break of structure. The first break of structure was given, right? Then after that, what happened? Price came back, collected the liquidity that was sleeping below. Fair value gap was sleeping, key level, which is your last candle, which collected liquidity to the downside before spiking to the upside. That is how a change instead of delivery comes in. From there now, you can have a clear setup and a good setup at that, where you might be targeting your 1:2 delivery to reward and whatsoever, guys. That is just it. Forex should not be complicated. So you are going to have a good risk to reward ratio of at least 1:3. Let's dive into a live chat and we quickly see if we can get that change instead of delivery. I mostly trade GBP USD, right? This is GBP USD on the 4 hours time frame. Now let's see what we have on the daily time frame, guys. Now on the daily time frame, remember when I was explaining all of this to you, I mentioned something about time and price, right? I mentioned something about time and price. And when it comes to time and price, like I said, we'll talk about that on our next video. But here we have a range high, right? We have a range high which was collected. Do not be confused, guys. We have a range high here which was collected, and you can see that is where the total soup came in from, right? That's where the total soup came in from. And this was our range low, which price obviously collected this Friday. But now, where does the change instead of delivery comes in? I told you that a good key level is that which has what? An order block and the fair value gap above it. Like I was saying, a good demand or supply zone, or like I say, a good order block is that which has a fair value gap above it or below it. Here, look at we're on the daily time frame, right? On the daily time frame here on GU. I don't want to make this video too long because it wasn't really supposed to be like that. You have your total soup here. You have your total soup here. Here you have a total soup, guys, right? We have the total soup right here. You have the total soup right here. And after the total soup occurs, what do you notice? The impulsive push to the downside. Now this is on the higher time frame, but it relates to what I was just explaining here. Now you have that what market structure shift to the downside at this level. Do you see that? Market structure shift at this level, right? Total market structure shift. Order block, fair value gap. Do you see that fair value gap? This is the fair value gap here, right? This is the fair value gap. And above the fair value gap, you had that key level, which was your order block. What do you notice? Price came, tap into the fair value gap, equally the order block. Then what happened? The candle closed within the range. And what do you notice after that? That is where the real move of price came in from, and it went straight to where our range low after the range high was collected. If you enjoyed this video, give it a thumbs up and hit that subscribe button for more advanced CRT and SMC concepts. Comment below with your experience on CISD and read every comment. Peace out.